Hi everyone, welcome back to the Indicott Invest channel. Today we have another episode on building wealth $100 at a time. Crazy week, right? I mean, a lot happened this week, so we're gonna hop right into it. Firstly, let's take a look at the portfolio. Uh, Again, past 3 months we're down 11.6%. Past month down 14%. Past week down 6%. I mean, we suck. We suck right now. The SPY the past week is flat. Past month it's basically flat. Past 3 months it's up a couple percentage points. So we're getting destroyed in terms of comparing to the S&P. Um, Now we obviously saw a massive drop last week, and I'm sure everyone was affected that watches this video if you're in high growth names. Even not high growth names, even Amazon was down a bunch. Um, but yeah, last week we were down a lot. I think in part, and we would have been down a lot more if it wasn't for yesterday. As you guys can see here, if we look at the day, we were down 8% pre-market, and then throughout the day or throughout pre-market, it slowly went up. And then once the market opened, we basically just ended flat. And then after hours, up a little bit. Um, so the market crawled back a little bit, which was nice. Now I'm gonna go through each name, Nebius, Zeta, and kind of go through all the names. I first want to tackle Hims. Um, Basically, long story short, if you guys are living under a rock, a lot of news dropped. I posted a video yesterday, or yeah, yesterday as to why I sold. Um, or 2 days ago as to why I sold. Get a lot of hate for it. Classic community stock. But essentially on Thursday morning or Wednesday morning, I forget the day, Hims essentially dropped a Wegovy copycat. That then for me sent a shock of sort of initial, "Ooh, this is exciting," and then I thought about it a little more, and initially my thesis was they were done with Novo Nordisk and trying to push this GLP-1 narrative. They've also talked about how they're divesting away from it in previous earnings calls, and I was really happy with, the cancer thing that came out on Monday or Friday of last week and labs and everything they're doing, and so I was thought the GLP-1 focus of GLP-1 was gone, and it was just gonna be another segment of their business. But this to me showed to me, that they're gonna keep going into it, they're gonna keep hammering it, which there's again is gonna create risk over the stock, and it's risk I don't want to be a part of. B to me, shows a little bit of desperation as they need GLP-1s to grow, and so they're going in and trying to hammer this GLP-1 thing. If we go ahead and take a look at Hims, um, at the stock itself, I mean, guys, it is not looking good. So if we go ahead and take a look here, Hims, I sold in I think we saw the portfolio, I sold at like 23, 24. If we take a look here, it is down another 16% after hours. Now, why? Why is it down 16%? Well, here is exactly why. So let me zoom in for you guys that want to read at home. So basically, in short, the FDA came out with a piece saying we're coming after Hims, and they named Hims and Hers in their piece. And so this is exactly why I sold and exactly what I was talking about. I literally called it that when they decided to go after Novo, and there was back and forth between Novo and Hims. Novo saying, "Oh, we're going to come after you." Hims saying, "Well, we don't care, and we're using our own technology for delivery." Either way, I wasn't a fan of that either. They then come out literally a day later, and the government says, "Yep," or the FDA says, "Yep, we're coming after him. We're coming after people that are GLP-1 compounders and Hims and Hers specifically." They named them in the article. So again, guys, like honestly, I'm pretty proud of myself for just taking a step back and realizing it's a thesis breaker for me and just clicking sell. Right? I feel like a lot of people are like, well, I don't know, because they become emotionally attached to a stock, and so just from my perspective, as I'm still learning how to invest, guys, like, I've only been doing this for 6 years, like, I have a lot to learn. For me, honestly, I think it's again, I learned a lot in terms of I think I was still even a little emotional in other yellow flags that I noticed earlier. Specifically, last earnings call, him said, "We're in talks with Novo Nordisk." What? Like, to me, it just felt like a now looking back, like, they're just trying to pump the stock. Also, Andrew Dunham coming out and giving the eye emoji to short sellers being screwed and then having a pre-planned sale quite literally the next freaking day. Like he knew the pre-planned sale was there too. Like it's ridiculous. And to me that's a yellow flag, if not a red flag. And I think, looking back objectively, I should have sold then, obviously, in hindsight bias. Um, But yeah, I'm glad when I did feel like this was a thesis breaker for me, I pulled the trigger, just sold, boom, cut my losses. And in total, I still covered calls and a lot of cash you could put throughout holding it. So I actually probably eked out a little bit of a profit, but nothing to brag about and nothing to return that I really care to even talk about. But that's him, guys. We won't be talking on the channel much unless some crazy news happens. Again, I'm not opposed to coming back into the stock if the thesis changes. So if let's say we do get a lawsuit figured out and somehow Hims wins, or all they have to do is pay a couple 100 million and call it a day, and they set some new laws, I may go back into Hims. I may see some growth there. I might see something I want to get into, but for now the thesis is broken, and I think the lawsuit risk and the FDA risk is going to be a hang over the stock for a while. And so I don't want to be a part of that. All right, next up we have really just big tech and Nebius in general. And so I want to take a look here. So, firstly, let's go to the portfolio. Let's talk a little bit about Nebius. So, Nebius had a crazy day yesterday. If we look at the weekly, basically flat for the week, which is pretty nuts. But if we look at the 1 month, again, down 13, 3 months, 17, not looking too hot. But yesterday on the daily, that's 17%. Now, I personally don't really understand why. So typically, and just for your guys' reference, like Iron's another name that moves in tandem with Nebius, but it was only up 5% yesterday. And usually, honestly, in the past, Iron usually does about 30% more or almost double what Nebius does each day. So if, for example, if Nebius is up 5%, Iron's usually up 10%. The reason for why is they have a more of a short float and a way lower market cap. I think they're half the size of Nebius in terms of market cap. And so it moves a lot more volatile. Um, yeah, Nebius was up 17%. Now there could be a couple reasons. Um, I do think long term Nebius will come out to be the winner, and so maybe let earnings for Iron show that they don't know what they're doing as well as Nebius. I don't know. I didn't listen to their earnings. Um, but also another big piece, and this is beneficial for all AI infrastructure names, is capex outlook. So we see here again, Amazon 200 billion versus 146 billion, Google 180 billion versus 120, Meta 125 versus 110. Microsoft, no guidance, but same tone. So we see that the estimate was 375 billion in capex spend, but the guide is going to be over 500 billion at the midline for capex spend. And so big tech is still divest or investing a bunch into capex spend and AI infra outlook and build out. Now, to be fair, capex does not mean it's going directly to Nebius. And so when people say it's bullish for Nebius, I think what it means is the broader trend is bullish for Nebius, that big tech still sees the benefits in AI, and so they're building out for it. That is the benefit, but capex is not what's going to be spent on the contract for Nebius. That is opex. So just as an investor, think about that a little bit. Like capex does not mean that's going to go to Nebius. Capex is on assets, not contracts. That would be under opex, and so that's a very important caveat. But I think it's important just the overall trend that the big tech and the big companies understand that this is where the world's heading. We need to be a part of this, and they see the value in it. So obviously, in my opinion, these companies wouldn't be investing this much if they didn't see an ROI coming in the future or even currently. And so that overall is the macro trend thesis for me. And again, obviously Nebius is in the inference space. So for people that don't know, there is training. So that's when you see OpenAI model 4.5 or 5.2 that is being trained. That is a lot of compute. But then the inference is when you're asking questions, question answer. That is inference. So when they get the response back and forth, that is the inference compute. So two different levels. Nebius is more of the inference layer. Um, but that's more of my thesis there. Again, crazy week for Nebius. I can't believe it was up 16%, sort of insane. But yeah, good week nonetheless, and we'll continue to buy at that 25% stake. Next, Meta. They had earnings, they crushed it. If we take a look at their revenue by user geography, again, their highest revenue quarter ever. Um, I mean, I think the growth was like 20%, so 20-ish percent, 24%, and they're guiding for 30% growth for next year. I mean, it's just insane. It's insane how much they're growing. Um, it's a great business, and actually, in our portfolio, it's one of the only stocks that we actually have a profit on. If not, actually, it is the only stock. Take a look here. It is the only stock we have a profit on. It's up 1.2%, 1.26%, while the rest of our portfolio is getting just demolished. Um, but this is just a part of the game, guys. I think If you've been doing it, if you're new, or if you've been doing this for a while, you understand that high beta investing in high beta, it's just a part of the game. You're gonna have down months, maybe even down years, and that's just a part of investing. But you'll have a lot more up years, in my opinion, if you find the right names. Um, Now on Amazon as well, they are down. They were down 5% yesterday, and they had a massive drop. I think around 10 to 11% on their earnings. Now there's a couple reasons. Again, I think it's just capex concerns. Every big tech is down on capex because it's funny. We're sort of in a narrative market where AI is going to replace software, so software is going to die. But then the software names are going down, and the AI names are going down. Make it make sense? I can't. Um, but again, I think it's capex concerns. And then lastly, I think the real big concern, and I think this is a fair concern, is the offer to shelf offering with the size not disclosed, meaning they're going to go free cash flow negative and they're raising debt for this build out. And so that's where it gets a little concerning. When you see debt being raised and you see companies go into debt to build, that's where I start to me, it becomes a little bit more of a concern in the idea of the AI bubble. I don't think we're there yet. Um, as Google and other companies are still doing it free cash flow positive. But it is a little concerning, and I think that's why Amazon's down. Is they're going to be going free cash flow negative for this build out. And so again, I'm still a buyer, guys. Like Amazon's here to stay. They also have AWS that's growing, I think 24%, 25%, doing tens of billions of dollars a year in revenue, billion tens of billions of dollars in net income. So it's just silly to me to think these companies are going to die. Now, there could be some short-term headwind about, you know, the capex spend, but I'm okay with that being a part of this bullish AI sentiment. But yeah, that's Meta and Amazon. Again, both of them beat earnings and crushed earnings, but their capex guide was a lot higher, and so I think that just shook the market a little bit. They're like, "Oh, you're spending a lot more on capex than we thought." Um, but I think these guys, Andy Jassy, Mark Zuckerberg, Satya Nadella, Sundar Pichai, they know what the heck they're doing. They understand that they're doing this for the ROI. And Meta, even on their earnings call, mentioned a couple of times like how they're seeing it in their internally that people that use these codecs, people that use these internal LLMs and agents are seeing a lot more productivity. Now, to be fair, they probably have to say that to justify their capex spend, and so that's sort of a double-edged sword. But I'm of the belief that AI is still we got a long way to go. But I already see benefits in my personal work. So yeah, that's Amazon and Meta. Next up, let's just talk about Zeta a little bit. Nothing really in terms of news this week. Again, up 5% yesterday for the week, down 8%. It's sort of just being bucketed with software, as we can see here. I mean, it's down almost 30% in a month. Past 3 months, 9%. So it's just being bucketed with software. If we look at the tech software ETF, we look at the 1 month, it's down 22% in a month, guys. This is an ETF, by the way. This isn't some high beta company. This is all tech software being sold off 22% in 1 month off of no news, guys. Nothing. Now, Sam Saul made a good point yesterday that really the only thing we can really bring it to is the Warsh, possible Warsh hire. Now, he hasn't been elected yet, but he is not for QE. So he's not for quantitative easing, meaning he's not for allowing cheaper debt. And so typically software names do raise a lot of debt. And so that could be the thesis. But again, it's just like really, really no macro news yet as to why this isn't happening. And it's sort of insane, in my opinion. But again, Zeta's just being bucketed with software names. And so I will continue to buy. Nothing in the thesis has changed. Now, earnings is in 2 weeks. I think 2 weeks. Yeah, 2 weeks. I will be live for that, and I'm pretty pumped for it. I think they'll do well. But again, it might not matter, honestly. Um, but yeah, that's IGV. Now, next up is Pagaya. Let's talk a little bit about Pagaya before we actually let's hop into IBIT. As you guys know, I just wanted to be a part of Bitcoin. Of course, I decided to be a part of Bitcoin as soon as it wants to crap the bed. I think it's down if we take a look. It's down 23% month to date, or past month, down 31% the past 3 months. And so people are talking about crypto winter, which is possible. I'm in it for the long term. And so I'm okay continuing to DCA and buy in. But yeah, guys, I mean, it's just getting destroyed. There's no thesis there. It just follows Bitcoin. And last is Pagaya. So Pagaya up 12% on Friday and 5% after hours. Now the reason it's up 5% after hours they have earnings Monday. I will be live with Wealthmatica Nick and someone that some of you may know if you're in the Pagaya community, Trevor. We will be live Monday morning to talk about Pagaya. Again, I think they're going to do well in earnings. I am a little concerned in terms of just macro. The reason I wanted to get into Pagaya macro wise was because of interest rate cuts. But if Warsh is hired, he is not anti interest rate cuts, but he's anti quantitative easing. And so I don't know. I am a little just concerned on that. I think it will be a rocky ride for Pagaya moving forward if Warsh is put in. I still think they'll continue to outperform though in terms of their expectations of revenue and earnings. But I again probably will only make it around a 5% position in this portfolio. So nothing crazy. If we take a look right now, actually, let's take a look what percentage it is right now. So it's currently 5%. So I'm going to stick around with that, being the percentage. Now, we've talked about all the stocks, we talked about all the names, but what's next? So I sold HIMS, meaning we have around 15% that we aren't allocating. And so that kind of begs the question of what am I going to buy next? Now, I personally am not entirely sure. If you guys have any recommendations of stocks I should look into, put them in the comments. But there's a few names that I really do like. Like I do like SoFi. I used to own SoFi a while ago. He actually just did an interview with retail, which I think is awesome. I like Hood, another, as you guys know, the app I use for investing. So that's another company I like. I used to, and I liked a lot of Lemonade back in the day. Last summer, I used to own Lemonade, so that's another one I like. But I'm looking to try and find, another high beta name. I like high beta. I actually already have Meta and Amazon. Those are my two big techs I think will win. There is a chance, honestly, that I just put a little bit of an Nvidia. I think Nvidia is just that the capex that we saw. So if we go back to that capex, um, this capex is what matters. Like this is Nvidia's bullet. This is bullish for Nvidia. Like this directly is ties to Nvidia. Capex is the GPU, physical GPU build out. And so I just think Nvidia, I think it's at the lowest forward PE it's ever been. And so honestly, the more I talk out loud, the more I just might put it into Nvidia for now as sort of not a safe haven, but just to give a little bit of balance to the portfolio. It's a little more high beta than an Amazon or Meta. Um, and I think it's going to crush and is a part of my AI thesis. So, you know what? I'm going to denounce right here. Nvidia is the one I'll be buying. Um, again, I'll probably will make it a 15% position. So we'll have Amazon, Meta, and Nvidia as 40% of the portfolio or 45% of the portfolio. Um, or no, 40%, 40%. Just because Nvidia will be 10%. But yeah, so that's the portfolio, guys. Appreciate your guys' support. You guys are awesome. This is super fun to do again. Even though we're, we're getting absolutely crushed, it's still a blast to record these videos and just kind of talk about the portfolio, talk about stocks and just kind of shoot the shit on the names. Um, but yeah, I appreciate your guys' support. I will see you guys next week for the next episode and peace. Appreciate it.